Hey, I'm Ken. Welcome to Stock Market Unfiltered, where we take a candid look / funny at the stock market. And sometimes we try to, look at that. We try to be educational and a little entertaining from a common folk person. I'm not no analyst. Oh, I dressed up like one today, like I'm doing something great. I take credit this time for some things. And I've mentioned on here before that if I goof up, for me, myself, if I say something that turns out wrong, I'll admit it. But when something turns out correct and I talked about it as a common sense approach, so I'm not no paid analyst, although I do manage some people's money, by the way, believe it or not, some friends and family. So that keep me busy. But when I'm right, I won't take credit for it. So nothing wrong with that, is it? In the past, I've talked about panic. I've talked about being patient. If you panic and are not patient, you become emotional. When you become emotional, you make wrong decisions. Okay? You make wrong decisions because you let your emotions take over. If you want to buy a stock, key in a price. And we'll use Prudential, for example. When I keyed in 75.50, it was 75.70 at the time. Well, let's say if it had gone down to 75.53. I said, well, that's close enough to 75.50. I'll key a market order in. Well, by the time you key that market order in, whenever it hits the market, that is exactly the price you're going to get. And some of these volatile stocks, Prudential was kind of volatile in the past month or so. You thinking you're going to get somewhere around 75.53, how about if it jumped up to $76 by the time you keyed that market order in? Then you just lost. So that's the point about being patient and keying in a price that you want to buy it for. Also, it goes the other way when you're trying to sell something. You see something going down and it's flying down and you panic and you just hit a market order and sell it. Don't do that. If you're not down 20%, don't do that. Especially if you got a dividend that looks good and it's down for no reason. If it's down because it has bad earnings, that's a different story. You just kind of got to be under control. So, we're going to talk a little bit about panic and stuff because I've talked about it before. I live out in the country. Man, I have squirrels and birds out in the yard. And they've gotten so used to me, I can go out there on my front porch and they see me. I'm talking about squirrels and birds. And they come running up to me. Why? Because they've learned that I feed them. The squirrels come up to me. I'll be sitting on a chair, a little front chair I got sitting out on the front porch. They come right up, jump on my lap, and get a peanut out of my hand. And if there's one on my lap and the other one ain't got time, he'll jump on a table beside me and get his own peanut. Kind of crazy. I got pictures of this too. Birds, the same thing. North Carolina, the state bird is the cardinal. It's a red bird. That bird flies up on the rail and sits there 2 feet away from me and waits for me to shell a peanut and give it to him. But then guess what? Squirrels are wild animals, so are birds. They hear a screeching noise like a hawk or an owl or whatever. You know what they do? They haul ass and run like crazy. Ask questions later. Remember when I talked about that, I don't know, a few videos ago, somebody makes a noise and they all take off running and ask questions later. Sometimes that's great. In the squirrel's case, there actually was a hawk up there and it missed them. So it was good for them to run. Then one time, there was just a little, I don't know if you're familiar with a blue jay. It's a popular bird in North America. It makes a loud noise. One of those was out there and made some noise and sent them all the squirrels scattering. In this case, it wasn't necessary. But you never know. So that brings me to my taking credibility. I like this little thing here. You know what this is going to be, right? Yeah, we'll raise that right up. Look at that. You know what that's about? Payday. I'm glad I didn't eat this the other day. I had enough of that. It was a 5-alarm fire yesterday, wasn't it? I'm talking about Pioneer Natural Resources. And remember I told you about this panic? I think yesterday was panic selling. That's why I'm dressed up lace, by the way. It's payday from yesterday with Pioneer Resources. Although I didn't sell it, but it's still payday. It's like payday. Everybody's in a good mood to own that stock. I heard people talking about it today. They were all happy. But then, as I said yesterday afternoon, before they all started dissecting it this morning, that there was nothing in that report from Wall Street Journal indicating that they was actually going to buy Pioneer. I'm talking about Exxon buying Pioneer. Panic buying right yesterday. And I told you, I didn't know what it was going to do. Is it going to go, when they figure all this out and digest it and this, that, and the other, is it going to go back to 208 where it was yesterday before it made that $17 move up to $225 for a high before it settled in around 220, something like that? So we have our answer today. At the moment, it is $220.23 plus 1 cent. But to me, that's a good sign. They digested it. They didn't sell it back to where it was at yesterday, which was 208. It's $7 now and $7 above my cost average. So I'm in good shape, along with probably some other people. Now it's down 12 cents. So my point is, it got down to $217.80 a day. It got as high as $221.55. So it's pretty stable, which is what you want it to be after that great big run up yesterday. I would not have been surprised to see a bunch of people taking profits on it. But there's also a thing out that the CEO for Pioneer might be interested in maybe being acquired. But guess what? Not at this price. I wouldn't either. What did I say yesterday? I think this stock should be $280. 52 hours, 288. I think the price targets are 255. So Exxon is not going to be able to get this stock at this price, which is $220.11 now. Not going to be able to get it. So we're going to stay the course and see what happens. And I'm taking credit for some of the things I've talked about today because I had that right too. It's my channel. If I do something bad and I've told you, I'll admit to it. But I've talked about panic selling and panic buying. And yesterday was a perfect example of panic buying Pioneer Natural Resources. On what I also talked about, the news of the day. Remember me? I talked about stocks can move on the news of the day. They can move on a good earnings, but a bad guidance. They can move on a bad earnings and a bad guidance. And news of the day moves stocks. And yesterday, I proved my point that I told you this about 3 or 4 videos ago, that be careful, news of the day moves stocks. And yesterday, what happened? The news of the day, which really was nothing but a rumor, because rumors will move stocks also. You should not react to a rumor until you get it confirmed. I'm glad they all reacted yesterday in a positive way, because for all of us that own Pioneer Resources, it was this. Ching-ching, ring the cash register. I like that. But anyway. So, and now I'm going to take care of some more credit. Okay. I have a right to do that, don't I? Hope y'all don't mind. Prudential Financial. You knew I couldn't resist not talking about it, right? Well, what I want to say about this, I thought this stock was unnecessarily sold. Brought down. I didn't see any reason for it. And I bought some. I remember if you watch some of my videos, I bought some for $77. And I said if it went down, I was going to buy some more. That's exactly what I said. And guess what? That's exactly what I did. I bought some shares at $77 back on March the 16th. And then we had that 52-week, all right, death cross symbol. I don't have my death cross thing, but you guys know what it is. Somewhere around the 16th, 15th, when that symbol came out. Sent the stock down to a 52-week low, 75.37. And I bought some at 75.50. This was back on March the 24th. Today's the 11th. We're talking about 18 days. And not all those days are trading days. Probably 4 or 5 of them or weekends. So let's just say 15 days. 15 days. And Prudential has gone from 75.37 at its 52-week low back on March the 24th when I bought more shares because I told you I was going to do it. And today it's $85.77. It's up $1.62. And since March the 24th, this is a $10, if you go to the 75.37, this is a $10.40 move on Prudential that I told you to stay the course and told you I was going to buy more because I thought it was unnecessarily sold. And to me, this just proves my point. We'll see what happens when earnings come up. Still has a price target of 100. It's at 85.75. Not quite near the high today. The high today was 86. So that's Prudential that I told you I thought was unnecessarily sold, and I bought more. And we're going to go over one more. TFC, Truist Financial Company. When I thought, when we had all the problems with Silicon Valley Bank, Signature, First Republic, Credit Suisse, Deutsche Bank, on and on and on. And it sent TFC stock down to $29 and something. I bought some at $32.50. If you remember, I told you about that. And then I saw it kept coming down. I said, that stock is unnecessarily being sold. And I bought some more at $30.50. So I have a cost basis of $31.50 because I bought the same lot of shares at $32.50 as I did $30.50. Okay. Well, since that time, it's not been up that much, but it's $33.72. So there again, from $30.50 to $33.71. $3.21. 10% of $30 is $3. 30.50 plus $3 is $33.50, and it's at $33.71. So on a percentage basis, it's over 10% up since it's low. If you have a good stock and you know it's a good company and it's down for no reason, don't sell it. That's just my advice. But everybody has their own different situation. I'm in it for the long term because they paid a dividend. Remember, Truist pays a dividend of 52 cents a share. You got 100 shares, that's $52 times 4. That's $208 a year. If you only got 100 shares and you got a $3,150 investment, $3,150 investment, earning $208 a year. So that's not much. But you go put $3,100 in the bank and see if you get $200 interest in a year's time. You won't. Oh. Well, anyway. I know you're tired of me rambling on, but I want to take some credit once in a while because I do feel like I'm trying to give you good advice in a candid form and being funny. And if you look beneath my funniness and entertainment, because people learn more when they're entertained. I did. But it's going to be a busy week. So watch, if you own your stocks and manage your own stocks, be careful. There's a lot going on this week. And we're going to start with tomorrow morning at 8:30. You ever heard of the CPI? Consumer, not the alarm company, the Consumer Price Index. Consumer Price Index, it's a kind of a weighted average market. It's a basket of consumer goods and services that are purchased by me and you, households, things like that. And they have they'll give you some numbers. The forecast of what they're expecting from the market, CPI is 0.3. And then you got a core CPI of 0.4. And there's two different CPIs. You got one that says includes everything. Then you have one where they take out food and energy. And then they give you a number. So the feds, everybody's watching this meeting, the CPI, and see what these CPI numbers are going to be. If these CPI numbers are hot and it indicates inflation is present, they think that's going to be a bad sign for the market because the feds are going to continue their raising of interest rate because they are determined to stop this economy's inflation. So we'll see what happens. So the forecast is 0.3 for CPI. You probably look at another website and it gives you something else. The website I was looking at, it said the forecast for CPI was 0.3 and the core CPI forecast was 0.4. You can look at probably some other ones, they'll give you different ones, but generally it's fairly low. So we'll see what happens with that. And also, hourly wages. And the economy is added 238,000 jobs. So you got to look at this. This is what all these people are talking about. And I'm trying to break it down so you can kind of understand it in layman's terms. When the labor market starts filling jobs and there's less jobs available, okay, even though we had 236,000 added non-farm payrolls added last month, when there are less people out there trying to apply for jobs, it's what? It stabilizes a company having to offer a higher wage to get a worker to come back to work. Because now, as the jobs open and shrink a little bit, which they are hoping for, companies don't have to go offer exorbitant hourly pay for their employees because the labor market is getting a little tighter, and the Fed would like that because that stabilizes wage. If you're not making as much money and inflation is higher than what you're making, you can't spend a whole lot of money. So if you're not spending a whole lot, typically, it would cause the economy to go down or prices to go down because you're not buying as much. So there's not a bigger demand and supply goes up. When supply goes up, prices come down. So I'm just trying to make it real simple. If we see a bunch of numbers coming out with you tomorrow, okay? So, all right. So other than that, another reason I'm dressed up, I feel like a banker today. It's financials are coming. And we started off my new channel talking about finance, and I got tired of talking about them just about like y'all hear me talking about Prudential, but it's all good fun. That's all it is. But there are a lot of things happening this week, and especially over the next 10 days. For example, Friday, April 14th, Citigroup, JP Morgan Chase, PNC, Wells Fargo, these are all banks, are reporting their earnings Friday, along with Silicon Valley Bank, and they got bought out by First Citizens right here in Raleigh, North Carolina. Thank you for that. We'll see what their earnings is going to be. So people are going to be super looking at these banks, right? And these are some big banks. Citigroup, JP Morgan, PNC is a regional bank, but it's still a big bank, and WFC, which is Wells Fargo. And then next week on the 18th, Bank of America, ticker symbol BAC, and Goldman Sachs report. They're big companies. And then on the 20th, my little old TFC, the one I own, they report on the 20th of April. So we have all these earnings reports coming out from banks. And then they're going to be scrutinizing the heck out of every one of these banks. So we have the potential to have a really great week coming up in financials, or we have the potential to have a disaster. If I see a disaster and I still know the company's good, I'm going to be buying some more TFC if it goes down. And if it goes up, I'll just let it go up and be happy. So, a lot to keep your eyes on this week. So stay the course. And we'll probably may come on tomorrow morning. We'll see what the CPI number does. See if it's any panic through the market, or if it's causing what I think is panic, I'll come on. If it's just a regular, normal number, it's not that big deal. So anyway, hope you guys have a good Tuesday for a change. And the weather's nice here in North Carolina. We actually got lucky. It didn't get complete rain out on Sunday. I was able to cook out with my son, and it didn't rain. We had a good time. So anyway, look, I really appreciate you guys listening. Hope you guys are learning something, and hope it gives you some ideas for your portfolio if you're managing your money. Thanks for watching. Have a good week.